All right. On today's hot sheet, we are discussing the current inventory status for the last week across the country, active inventory, as well as existing home sales per NAR. We also have an FOMC preview. All of that here on today's hot sheet. Today is Monday, January 27th, 2025. I am Byron Lazine, and the hot sheet starts now. All right, here we go. Welcome into the hot sheet. I hope everybody had a fantastic weekend. I see good morning from Orlando. Carmelo, what's going on? Jason from Roseville, California. How you doing, brother? We've got Beth and Leonard. We've got a whole bunch of you guys jumping in here, letting us know. Definitely let us know where you're tuning in from so that we can connect inside the live chat as well. Continuing to grow the biggest community in real estate. Agents of Change. Of course, you can join the community of BAMX by using code HOT today. All right, let's jump into what we've got here on the agenda. Housing inventory as we kick off every single week. Are we moving in the right direction? How positive and encouraging is the news? We're gonna lead with that. We have existing home sale data from NAR. Is that going to tell us anything about the future of this market? And then we have an FOMC preview. It is Fed week, so a lot to cover there. And we'll also have our top cash offers for the week per Zudilio's stats there. All right, let's jump in here to the first metric of the week, which is the inventory. Okay, in inventory here for the week, we're looking for moves up. Okay, so if we're going back and thinking about where we've been the last couple of years, obviously we've been at, the lowest point in, historical data, really low points. We're looking for moves up earlier in the spring to try to gain on some of these losses over the last couple of years. Here's where we're at. Haley, want to make sure that you guys are seeing. Okay. You must be seeing this the right way. I'm seeing it backwards. I think that's just on my end. With the new desktop, but Bobby will help me fix that. I'm hopeful. Let me know in the chat. You guys are not seeing these charts backwards,
it's
right?
all good.
It's all good. All right, thank you. Haley, get that mic. That was a diabolical mic situation there. Tell Bobby to get you the microphone so we can have you dialed in. All right. Here's the inventory. 26% more than last year. Good. We'll take that. Obviously, coming off of low. Situation last year. Now, what I really want to look at is let's take 2020. Everybody takes 2019, but when we're as long as we're pre-March 2020, I like looking at 2020's data. For those of us that were in 2020 in the game and operating, let me know in the live chat where you go 2020 if you were in. Okay. When we were in the beginning of 2020, January, I do not remember anybody in any market across the country saying we are in an inventory crisis situation. Okay. Now, 2020, we had 731,000 active homes for sale in 2020. Okay. So 731,000 January, same week in January of 2020. This week, we have 636,000. So we are now less than 100,000 away, which just for some context, in 2022, same week, we're at 271,000, right? So 2022, 2021, when we were talking inventory crisis, 23, 24, 24, just last year, 506,000. We're starting to get out nationwide, and a lot of this is driven by Florida and Texas. I get that. You might still be in certain parts of the Northeast where it feels crisis-like, versus pre-pandemic level. But 736 nationwide versus 731,000, we are starting to gradually improve. Okay. Now, 2019, we were at 816,000. So we're less than 200,000 away from that. In 2019, just for just to put 2019 into context, 2019 was the lowest inventory levels in multiple years at that point. Really, 2019, it was really low inventory for the year. Okay, so 2019, 2020, you did start to see, that there was going to be multiple offers with or without COVID coming into 2020. That was going to happen. 2020 was going to be a very eventful year in competition. Second half of 2020, obviously the competition ramped up in 21, 22, went crazy. But 636,000 right now on active listings. The number's not as important as the fact that we've had 2 consecutive weeks now trending up on active inventory. 2020, we were trending down. Okay. And listen, this is all pre-March when the world blew up. So 2020, January, we were trending down. 2019, we popped up a little bit at this time. February, we kind of hit that low peak before you started seeing that March, April. We start seeing an earlier increase in inventory as the spring's happening. You usually see a drop down in February, let's be honest, historically speaking. And that wouldn't surprise us here if we see a drop down in inventory as more and more buyers enter the spring market. But I'll take 2 weeks in a row of active inventory going up. Again, same time last year, we had a decrease from 506 to 503. This is according to Altos Research. So Altos Research looks at active listings differently than, NAR or maybe Realtor.com would when they include all the pendings on top of this number. We're at 636 when you extract the pendings and the escrows. There you go. 2015, we're at 938,000. That was obviously much different market there. New listings, we're also seeing now a couple weeks outside of the holiday of really improved new listing data. And I think last week being, the biggest mover there, up over 50,000 for last week, almost 51,000 versus 45,000 the week prior. Or same week last year, 43,000 in the same week in 2023. So that'll help drive this active inventory level if we can see new listings continue to enter into the market that we either weren't expecting or didn't see last year. Price cut percentages right now, we're in that seasonal time of year where you would expect price cuts to move down, not up. So we are seeing that. Okay. We are on the downward trend here in November. I'm sorry, in January. November is what time you would start to see them go up. January, we are seeing them move down. We're at 33%. That's normal. You typically would see about a third of people cut their home before selling. And so we're at 32.96%, 33%, 31% same time last year, 34% in 23. So no caution flags as it relates to price cuts. All seems very normal there. And we'll continue to look here as we go week over week. Existing home sales, according to NAR, they've been released now for December 2024. I'm really stuck on November here for whatever reason, but the existing home sale data coming out of NAR, the seasonally adjusted annual rate moved up to 4.24 million. Month over month, that popped quite a bit at 2.2%. Year over year, up 9.3%. Inventory was at 3.3 months of inventory. We saw that higher at other points of the year. 3.1 months when you compare to December 2023, and the median sale price up 6% to 404,400, according to NAR. So this came as a surprise. The fourth quarter on sales, on closings, was pretty strong in comparison to where we ultimately were trending on existing home sales. Now, even with that solid pop in the fourth quarter, we do have to acknowledge, that listen, we're still coming off of bottom numbers. The 9.3% from 1 year ago. Okay, this is sales grew 9.3% from 1 year ago, which is the largest year-over-year price gain from June 2021. The median existing sale price, again, that was the 18th consecutive month of year-over-year price increases, biggest year-over-year gain since October 2022. These are all big numbers, but we're coming from, numbers that were like trending towards 30-year lows. If we went on just an annual basis, not an annual adjusted basis, existing home sales were 4.06 million, and that was the lowest level in nearly 30 years. So we ended the year strong. We saw some pops on the adjusted annual analysis. We saw some pops that we hadn't seen since the interest rates, went up. But when you just kind of compare a year to the last 30, we're talking about the lowest level in about 30 years still. So that's the reality of where we're at on how many sales are happening in the market. Okay. The inventory of unsold existing homes dropped 13.5%. So when we were just looking at inventory, remember, NAR puts the pendings in there. And so they're at the 1.15 million at the end of December, according to their numbers. And so there you go, 3.3 months of supply, which 3.3 months of supply across the country, that would still reflect a buyer's market, a seller's market. You're going to see a buyer's market in Florida. You're going to see a buyer's market in parts of Texas, parts of Florida. So there are buyer's markets that are popping up across the country, as we've discussed. But you will see, majority of the country is still in a seller's market at 3.3 months of inventory. Here's where the existing home sales seasonally adjusted annual rate. Remember, the seasonally adjusted rate versus that 1 year mark of 4.06 are two different numbers. So 4.24 million is where currently at as on the December reading, still well off of where we were, 21, 20, 22. So these numbers have come down substantially to the near 30-year lows. Median price of existing home sales at 404,400. That's off of that peak that we saw the end of the spring in 2024. And so we'll continue to, follow that throughout the year. I mean, you go every single month, month going back all the way to the end of, December of 2023. This was the biggest percent change year over year. December of 2024, 6%. We got down in August to 2.5, and there was some thought that deceleration would really continue. It ended the year stronger than expectations. Total existing home sales percent change year over year, up 9.3% on this number here. And then here's the confidence index. Okay. So in December, first-time homebuyers, this is the realtor's confidence. With first-time homebuyers up 2 points, December over December. Sales to investors, flat. Cash sales down 1 percentage point per realtor's confidence score year over year. Distressed sales still at 2. Okay, so that's like no concern, and that's flat year over year. No concern coming out of the realtor community as it relates to distressed sales. Another number to consider here as people will start to compare to 7 and 8, which there is no comparison. Days on market, that's moved up. Okay, that's moved up 6 points according to realtors here over the last year. Existing home sales by region, you see the South is still making up almost 1 out of every 2 sales across the country. The way they're breaking these regions down, the South would include Texas and Florida. Those are pretty big states, so makes a lot of sense. You have Carolinas in there, and Georgia and Florida and Texas. Those are big migration states as well. So making up almost 1 out of 2 sales. West 19%, Midwest at 23%, and then the Northeast, where inventory has the most issues right now in terms of, comparing to pre-pandemic levels, well below pre-pandemic levels throughout the Northeast, only making up 12% of the nation's sales. Here's the sales by price range. Still, even though this is that 250 to 400, the median's at 400,000 and 250 to 500 rather, that's still 45% of the sales. Okay. So it tells you where the affordability is. The affordability is not in those $1 million price ranges. That's not where the abundance of the sales is going to come in. It's coming in still 250 to 500. Anybody that buys a house in those price range, when you think about the value of the dollar moving forward, is really, I almost don't even care where it is. You're probably winning 100 to 250, 19% of sales. So 64% are between 100,000 and 500,000. Huge numbers there. And then you can add 3%. So say 67%, 3% happens 0 to 100. 67% are less than $500,000. You've got 18% from 500 to 750,000. That's 18% of the sales across the country. Only 7% happened between 750 and 1 million. And 1 million plus was 8%. I mean, breaking down and like, hey, somebody says, hey, I want to get over $1 million for my home. Last year, only 8% of homes sold over 1 million. And then you could break it down into your market. This might be a great email, right? Last year, 8% of homes sold over $1 million across the country. Here in XYZ market, only 4%, or maybe it's higher. Maybe it's 14%, right? Showing that comparison, I think would be pretty good hook, pretty unique piece of data for the folks in your market. Price change in sales from a year ago by price range. You had 35% more sales happen in 1 million. So only 8% of the sales were 1 million plus. That was a 35% increase. 750 to 1 million increased by 33%. 500 to 750,000 increased by 26%. Okay, so huge increases there on those luxury markets, even though it doesn't seem like, hey, they're taking a lot of the sales. Still, the increases were significant. Okay, it's Fed week, one of our favorite weeks. Fed week means the FOMC is going to meet and discuss what the policy is going to be, and in terms of the federal target overnight target rate, right? So most analysts right now expect what we've been saying, that there will be no change to the FOMC policy at this meeting this week. That would keep it at the 4.25 to 4.5%. They expect, January, March, and May meetings to really hold, with maybe the next rate. March and January to hold, and the next rate cut potentially coming in May. Now, a lot can change between now and May. CME Group would agree with all of the analysis. This is kind of like the draft kings of watching the Fed, if you will. They've been very accurate, 97.3% chance that there will be no cut here in January. Now, no cut, maybe that'll help us, because we had 3 prior meetings that cut, and we've seen the 30-year fix do nothing but go up since then. Here's what some of the big banks are saying about the next FOMC move. Bank of America expects that the Fed will stay on the hold. The focus will be on the March decision and the Trump agenda. By the way, this is where all the questions are going to come in. Okay. What are you guys doing? What are you thinking about right now in March? What are you thinking about Trump's agenda? What do you think about tariffs? What do you think about the Trump economy? What do you think about the Trump executive orders? Powell is going to get pummeled with questions here Wednesday afternoon when he does a presser. I cannot wait for Thursday's hot sheet, when we break down everything that has to do with housing. Of course, we go through that entire hour. If you're unfamiliar with what we do on a Fed week, we go through that entire hour. We find all of the mentions of housing, all the questions that Powell was asked about housing, and then we beautifully display that here on the hot sheet on Thursday morning. So I'm really looking forward to this Thursday, because there's going to be a lot of questions. This might be the most active presser that we've seen. Okay, so Goldman says the January is unlikely to offer much new information. The statement might note that the labor market appears to have stabilized, but unlikely to provide strong guidance about the March meeting. The labor market stabilizing is maybe some of the worst news for the rates. Obviously, nobody's rooting for jobs to be lost, but if you don't have a labor market break, you're not going to see rates move down substantially. The March meeting is, they'll be looking for when those cuts are going to come. The baseline for forecast is 2 cuts of just a quarter point each, June and December, is what Goldman is saying. So Goldman is saying, hey, you're going to see a June cut, you're going to see a December cut, and that's it. They expect inflation to keep falling. They do not expect tariffs to restrain the FOMC indefinitely. So there's Goldman's thoughts on that. Now, again, I'm looking forward to the questions that Jerome Powell is going to be asked, because there's going to be a lot of economic data that are going to change how Goldman or Bank of America, looks and forecasts. We saw this at the end of the last week. If you missed the end of last week's hot sheet, we were talking about Fannie Mae's projections here now. Their new report came out with their updated projections, already changing a lot of their projections to the downside as they look at the economy and they look at housing in particular. They had a bump up on the 30-year fix. They had a bump down on total sales. That's what they're projecting now in 2025. We're rooting against that, but that's the reality of where Fannie Mae is. Bank of America and Goldman, they're going to change their thoughts about the Fed as more information on inflation and more economic data comes in, and what tariffs are going to actually be imposed. How is that going to impact inflation? All of those things, as they start to play out here throughout the rest of quarter one and into quarter two, they'll change how they project and analyze this information. Bank of America, as an example, just this week made an adjustment on one of the biggest nation's home builders, D.R. Horton. They are now downgrading D.R. Horton. They think, when Bank of America is looking at the housing market, and in particular new construction, they said, hey, it's going to be a bumpier road in 2025. So they're actually, downgrading a D.R. Horton, and basically you could bundle up new construction stocks with that. So will that change? It may, just like some of this inflation data will change. Just like Jerome Powell and what decisions he makes might change. One of the things that the Trump administration is saying they're going to do here initially, and it was an executive order that was signed, is open up energy across this country. Trump has said things over the last 7 days, like, we're going to open up energy. We're going to bring energy costs down. Once we bring energy costs down, there's two things he said is going to happen. We're going to stop this Russia-Ukraine war. That's what he's saying. Energy prices come down. It's going to force Russia in a position to stop the war. Also, and what we care about mostly, not that we don't care about that, but what we care about here as it relates to the housing market, is that when that energy costs come down, he is going to lean on the Fed to bring those rates down. Here's a clip. This is from Trump signing an executive order, and a reporter asked him specifically about what's going to happen once, in referring, you're not seeing the whole thing. You may have seen the shorter version of this clip. This is only 15 seconds. There's a version going around of 11 seconds. But the reporter asks him, and this is him off the heels of talking about energy, and just play the clip, and then I'll react to it.
That the interest rates come down.
Well, I would put in a strong statement.
Do you expect the Fed to listen to you?
Yeah,
Are you going to talk to Powell about this and bringing the rates down?
at the right time, I would.
So everybody's playing the part where he goes, yeah, and then they just stop it there, and they're like dropping the gangster glasses on him in the memes and all that stuff, and it's just like, it's like a political meme at this point when he's saying, yeah, I do expect the Fed to listen to me, right? He's like, he's on this, he's got this huge momentum here over the last week, so he's got a lot of confidence, I think, different than 8 years ago. But the actual part, that's a little bit of, just how Trump is, just yeah, I do. The second part is the most important line there. And what he says is, yeah, when the time is right, I am going to start putting pressure on the Fed. Now, I think more so when you have, a Treasury secretary, which is Scott Bessent, he might have more influence, but obviously who's going to influence him is going to be Trump. So you play that card either way you want. But what he said there was, when the time is right, I'm going to lean on the Fed. Now, Jerome Powell is going to say, we're not biased. Now, Jerome Powell has said these things in the past. He also pushed the Biden administration to print that extra $2+ trillion, which was a huge mistake. So he has dipped his toes in the past. But the time is right statement from Trump means that when they are driving energy costs down, one of the big reasons Trump wants to see these rates come down, obviously it's better for the economy, you're going to see more movement, is if you do see, which it's funny because this would bring 30-year fixed mortgage rates down, but if you don't see rates starting to come down, you will see construction workers start to lose their job. Trump doesn't want construction workers to lose their jobs in the first year or 2 years of his, final four here, because that impacts a whole bunch of other industries. Now that will drive down the 30-year fixed as well, but he wants to see rates come down and keep the job. So he's trying to play a balance. Obviously the Fed's got their balance and their two-way mandate from Congress, which doesn't include listening to, politicians. It includes basically, hey, we're going to get inflation at 2% and we're going to maximize employment. So a lot to be seen, obviously, moving forward. We're going to look at the questions as it relates to housing from Jerome Powell on Wednesday. We're going to break down the housing part of those questions, obviously, or anything that we think ties into housing on the greater economy. We'll break that all down Thursday morning. We'll have that all timestamped for you in the Hot Sheet show notes. Hot Sheet show notes, of course, uploaded into BAMX each and every single day, so you can sift through all the BS of the last 24 hours. We sift through it for you, rather, and so you can just get what you actually need. That's uploaded each and every day into BAMX. Use code HOT to get there. All right, last and final, we've got in cash offers here for the week from our friends over at Zoodealio. This is Zoodealio data coming for the week ending January 24th. Top 10 housing markets for cash. We've got Vegas still at number one. Vegas is probably going to be one for the better part of the year, in particular with what's going on in LA. Vegas was already hot all of last year. Before that, you've got Jacksonville, Tampa, Atlanta, Marietta, Georgia in the top 5. LA is 6. So cash offers last week coming into LA now in the top 10. That's obviously interesting there. San Antonio, Orlando, Phoenix, and Dallas. Okay, so there's your top 10 for cash offers over the last week, courtesy of Zoodealio. BAMX members all get access to the Zoodealio platform. That's a $2,400 value alone, just getting the access to Zoodealio inside of BAMX. All right, there's your hot sheet here for this Monday. Remember to sign up for BAM Pro Bowl on February the 5th. That's a week from Wednesday. BAM Pro Bowl will fill up, and the only way to get the replay is to be either a BAMX member or be on the live play. There will not be a replay going out. So make sure that you sign up at bamprobowl.com, bamprobowl.com for the Pro Bowl live event. We have Sharon Srivatsa, Jared James, Tina Call, Ken Pozak, and Kofi Luxury from the luxury department over at Reels, also going to be speaking, works with a bunch of athletes. And so really great event there. BAM Pro Bowl, February the 5th. Sign up, bamprobowl.com. All right, that's the hot sheet. Hope you guys have a great start to your week. I'll see you back here tomorrow morning. Until then, toodaloo.